Joining us with more on the impact of the G7 intervention on the yen is Tim O'Sullivan. He's a currency trader at Gain Capital. We spoke last night briefly before or really during the beginning of the G7 meeting. Also with us is David Mann, Director of Research for Standard Chartered Bank for the Americas. David, let me start with you. Why is it that Japan, just to explain to us, would like a weaker yen? You'd think that right now they need to buy a whole bunch of stuff to fix things, and a stronger yen would help them do that.
Well, it's a very important point to be clear on this. What everyone is trying to combat here is volatility in the yen rather than the level. If you look at the real effective Japanese yen, it's actually in the middle of the range of the last 20 years. It's not at any particular extremes. It looks like it's at an extreme when you look at the nominal dollar-yen rate. Of course, that is a new record low that we saw, and that's why we believe a lot of stops were triggered because of that, and it caused more volatility when we broke below it. But ultimately, this is about limiting volatility and reducing uncertainty.
Tim, you agree it's all about just kind of calming the markets down, or is it also about kind of reining in where the yen goes from here?
I also think that the level is critical, especially versus the U.S. dollar. What we're hearing right now is that the dollar reached 82 versus the yen overnight, and we saw a lot of exporter interest to sell dollars and buy yen. On top of that point, we're also understand that the Bank of Japan has communicated to the exporters that they would like those trades to go directly to the Bank of Japan as opposed to through the open market. So I would say that there's also a sensitivity to the manufacturing sector in Japan.
And let me ask you, you and I spoke briefly yesterday at the start of the G7 teleconference. At the time, we heard that the G7 would tolerate a currency intervention by Japan. It seemed a little light to you and really, frankly, to a lot of people out there because we were looking for more of a concerted action, everybody working together. What do you think since the end of that meeting? I mean, you're not really getting it yet, are you?
No. Well, last night it was all about the fireworks of the intervention. And as you said, Matt, we saw that tolerate comment, and we were really looking for coordinated intervention. I think that's what the market was geared up for. We got that statement. And interestingly enough, all the G7 did participate, but it feels to me as though a day later, 12 hours later, that participation level is not as strong as we had originally thought.
Would you have liked to have seen it stronger? I mean, let me ask you.
David. This feels nothing like the intervention we saw in September 2000, where it was coordinated and it was simultaneous and it was aggressive. The big difference here is, yes, we've seen aggressive BOJ, relatively aggressive intervention with an estimate of around maybe $25 billion, but the rest have really followed through the day in what, as far as we can gather so far, have been pretty non-aggressive amounts.
Guys, let me just put it out to you, both David and Tim. And Tim, you take it first. I mean, is it just a case here of, the guest we talked to yesterday said, you know what we're really going to hear is just, we've got a plan in place. If we need it, we've got it. Actually, we got more than that. But is this just kind of a statement to everybody, hey, we're watching the market closely. We can and we will do something if needed, Tim? I mean, that's kind of a strong message to the market.
I'm looking at it from this perspective. If you talk to the traders that were executing on behalf of their clients and on behalf of the Federal Reserve today, it was really a lackluster way that the Fed went about executing their portion of the coordinated intervention, if you will. So what I'm seeing is it's almost like a group hug. The G6 is talking to their partner and saying, hey, we're with you on this, but you're kind of on your own. So I think that the move up to 82 was obvious now in hindsight. It was an overshoot. We saw the exporters come in and sell dollars pretty aggressively. Now we're at 81, and I think the door is open for a move back down to those lows if we don't get that follow-up action.
How hard do they have to work? I mean, David, we keep hearing about this mass repatriation that's going to happen. Is that coming through? Clearly today, it doesn't look like you need to fight so hard against it.
Well, I think that there's a big speculation over just how much money really will be coming back and how much has already come back in terms of the short-term retail leverage money that's already been pretty much wiped out as of the moves that we saw earlier in the week. I think the really important thing to focus on now is, has this gone too far, and how much those flows coming in are really going to help to drive it, say, back through 80 and beyond, and at what point we'll see line in the sand being drawn by the BOJ. And I think I agree on the point with other central banks. It was a very symbolic gesture more than anything else.
You know, it's interesting. One of the Japan vice finance minister actually said, he's really concerned about any abrupt weakening in the currency. I mean, Tim, is that something? I mean, is that a real concern? Do you see that that's a possibility? And he's right to raise this concern.
Yeah, I totally agree with the idea that was brought up about the volatility being a problem. I don't think any central bank is really ever in favor of volatility. Having said that, I do think that the dollar level versus the yen is at a critical one, and I think that's the one that stands out. I don't think that the ECB is really looking to buy euros and strengthen the euro versus the yen at a euro versus dollar level of 141, 142. So I think what we're seeing right now is you've got the BOJ. It feels to me like they're going to be in a boat all by themselves, and you're going to see some clapping on the shore from the rest of the G7. But if you take a look at the step back perspective here, what is the BOJ going to do with all those dollars? They're going to put them into U.S. Treasuries. They're going to depress those rates, and that's going to put pressure on the dollar all over again. Cycle.
Let me ask, though, as far as, how much they really need to do. I mean, speculators have been clearly at work in this market, Tim, right? But how much demand is there really going to be for the yen?
The demand for the yen is going to be driven by the speculators, the momentum traders. I think if I go back 2 days, I started to hear about players that were looking to get involved in this trade because we were breaking out of that 81.5, 84 range that we had seen for months and months. So in terms of the repatriation, I think that's been overshadowed. I think that the local insurance companies that would have to repatriate, I think they're in a much better shape economically. But I do think that you've got now this excitement about the trade, and that's not going to be repatriation. That's a totally different group.
Are we going to see more intervention, David? Do you think that this is just the beginning of several steps down the road?
I think it's going to need to be. And the big difference will be that it will be more of a unilateral, the BOJ basically, maybe with a few others as literally on the sidelines. And that will be important for psychology to at least keep volatility. And we've already seen that. Implied volatility has come off since the BOJ has started to intervene. So we did have some panic. Everyone in the market had expected that all through the week we would have support from the BOJ. They didn't get it at first, but now they finally come in.
Tim, can you foresee a situation where it's got to be more than it's just kind of a one-sided intervention despite the hugs from everybody else? Do you foresee something like that having to maybe happen in the next couple of weeks?
I think it has to happen over the next couple of days. Otherwise, you're going to see the dollar head south versus the yen. I think if you take a look at the headlines, even out of Canada, from Finance Minister Flaherty saying that they're really concerned about the volatility, and then he comes right back with that and says he wants to talk about the tragedy and the crisis that's going on. He's kind of mixing those two messages, and to me it takes the spotlight off of the intervention, and it talks about the whole problem.
All right, Tim, thanks so much for joining us again. Tim O'Sullivan there from Gain Capital. David, appreciate you stopping by from Standard Chartered.